LLCs, or limited liability companies. People always hear that forming your business as an LLC saves a lot of money, but we constantly get asked how. Watch this video to learn what an LLC is and exactly how you can save money by organizing your business as an LLC. We're going to begin by explaining what an LLC is and what the benefits are. But we're also going to cover all the different ways in which a business can be structured, and which of those structures can be formed as an LLC. We'll end with a pro tip for businesses that want to make the most out of the way in which their business is structured. Real quick, make sure to subscribe to our YouTube channel where you can get answers to all of your business-related questions on a weekly basis. Now let's get started. So, what is an LLC? LLC stands for Limited Liability Company, and it's a legal business structure that combines the limited liability protection of a corporation with the tax flexibility of a partnership or sole proprietorship. It offers its owners, also known as members, limited personal liability for the company's debts and obligations, similar to the protection afforded to shareholders of a corporation, meaning that LLC members are not personally responsible for the company's debts or liabilities. At the same time, it allows for more flexible management and pass-through taxation, similar to a partnership or sole proprietorship. So the primary advantages of an LLC include: number one, limited liability. Members are typically not personally liable for the company's debts and liabilities. This means that their personal assets, like their home or their car, are usually protected if the business faces financial trouble or legal issues. Number two, there's also pass-through taxation. Unlike a corporation, an LLC does not pay federal income taxes at the business level. Instead, the profits and the losses pass through to you, the owner, who report them on your personal tax return. This can help avoid double taxation. For example, a corporation pays taxes on its profits and the shareholders pay taxes on the dividends. Then we have flexibility in management. An LLC can be managed by its members or by designated managers, allowing for greater flexibility in how the business is run. Finally, there are less formal administrative requirements. Compared to corporations, LLCs typically have fewer state-imposed reporting and record-keeping requirements, making them easier to maintain and manage. Each state has its own laws and regulations governing the formation and operation of LLCs, so it is essential to consult with the specific requirements in your state when considering this business structure. Speaking of business structures, LLCs can encompass the following four general types of businesses, so let's go into each one. We'll start with sole proprietorships. A sole proprietorship is the simplest and most common business structure, where the business is owned and operated by a single individual. The owner is personally responsible for all the business debts, taxes, and the business liabilities. This structure is best suited for small businesses or self-employed individuals, such as freelancers, consultants, or single-owner retail shops. One example could be a freelance graphic designer operating under their own name, such as Joe Smith Graphic Design. Next, we have partnerships. A partnership is a business owned and operated by two or more individuals who share in the profits, the losses, and the decision-making responsibilities. Partnerships can be a general or limited partnership, with general partners having equal responsibility and control, while limited partners only contribute financially and have limited liability. Partnerships are typically suitable for professional service firms, such as law firms, accounting firms, or consulting practices. An example might be two lawyers starting a law firm together. Then we have S corporations, or S Corps. An S corporation is a type of corporation that enjoys some tax advantages. It allows income, losses, deductions, and credits to pass through to its shareholders, and they report this information on their individual income tax returns. This structure avoids double taxation of corporate income because it's not taxed at the corporate level. S Corps are suited for small to medium-sized businesses that meet specific IRS criteria. They have to have fewer than 100 shareholders and only one class of stock. An example of an S Corp could be a family-owned restaurant that has a couple of shareholders, maybe the family members themselves. And finally, we have C corporations, or C Corps. A C corporation is the standard and most common type of corporation. It is a separate legal entity from its owners, providing them with limited liability protection. C Corps can issue multiple classes of stock and have no restrictions on the number of shareholders. However, they face double taxation. The corporation pays tax on its profits, and the shareholders pay taxes on their dividends. C Corps are suitable for larger businesses with plans to raise capital from investors or go public. An example of a C Corp could be a technology company planning to go public on the stock market. In summary, LLCs provide the greatest protection for sole proprietorships and partnerships. S Corps and C Corps already have limited liability protection, but if you initially form your business as a sole prop or a partnership and make it an LLC, this gives you the ability to switch your tax status later on without having to form a new legal entity. So eventually when your business grows and it becomes necessary to become an S Corp or a C Corp, you won't have to go through the huge headache and trouble of obtaining new federal and state ID numbers, updating your name and branding, and everything else that goes into setting up a new business entity. In this next section, I'm going to go over an example of why this can be extremely beneficial. So here's that pro tip we promised at the beginning. This is how to tax an LLC as an S Corp. An LLC can choose to be taxed as an S corporation by filing a simple election with the IRS. This does not mean that the LLC becomes an S corporation. It remains an LLC in terms of its legal structure, but it gets taxed as an S corporation for federal tax purposes. This can provide several benefits depending on the circumstances of the business. First benefit is the self-employment tax savings. One of the main advantages of electing an S Corp status for taxation purposes for an LLC is the potential for self-employment tax savings, which can be as high as 15.3%. Owners of an LLC are typically subject to self-employment taxes on their entire share of the business profits. In contrast, S Corp shareholders are only subject to self-employment taxes on the wages they receive as employees of the company, not on the entire share of profits. By paying themselves a reasonable salary and taking remaining profits as distributions, LLC owners can potentially save on self-employment taxes. And then there's pass-through taxation. Both LLCs and S Corps enjoy pass-through taxation, meaning the profits and the losses of the business flow through to the individual owner's tax returns, avoiding double taxation. However, in some cases, the S corporation structure may be more beneficial in terms of how profits are allocated among the owners or when it comes to certain tax deductions. It's very important to note that electing S Corp taxation comes with some additional requirements and complexities. S corporations must follow certain rules, such as having a limited number of shareholders, only allowing certain types of shareholders, and adhering to specific procedures for profit distribution. Additionally, S Corp election requires more paperwork, such as filing the Form 2553 with the IRS and potentially additional state-level filings. Always, before making a decision, it's crucial to consult with a tax professional or an attorney to evaluate whether electing S Corp taxation is the right choice for a specific LLC, considering the unique circumstances of the business and its owners. Here at CSI, we help business owners with this all the time. Schedule a free consultation with us if you want to learn more about the best entity structure for your business and how we might even be able to save some serious cash. As always, make sure to subscribe to our YouTube channel if you haven't already. Like this video if it was helpful, and leave a comment below if you have any questions. Thanks for watching this video, and we'll see you next time.